The mostly better than expected financial results from New Zealand's biggest listed companies last month have raised the question of whether the economy might be doing better than everyone thinks, or if the worst is still to come. Hamish McNichol wrote this week's Shoeshine. Can you tell us a bit more about the major themes that came out of reporting season?
Yeah, absolutely. So, going into the end of the financial year, the June 30 financial year, business confidence was diving, consumer confidence was diving. Omicron was ripping through the economy as well. There's stories every day almost of businesses having to shut down for periods because people were off sick and having to isolate. So, there was a real expectation that some of the results from our biggest listed companies were going to be pretty soft. And in fairness, a lot of them did guide fairly softly as well. So it wasn't like they were all talking about massively big years. But even so, um, analysts reflecting on the reporting season over August are broadly agreeing that the results were better than expected, much better than expected in some cases. But there are still, these big concerns and themes that are sticking out, and that's basically to do with how companies are dealing with staff shortages and continual bottlenecks around the workforce. Supply chain issues are still hovering overhead, and then obviously you've still got inflation, and I guess whether companies have been able to pass on those inflationary pressures to their customers or not, or their clients or not. So the feeling is that actually we sort of started to see the impacts of COVID a bit more in this reporting season, but maybe some of that is still to play out over the next little while.
Who were the big winners over reporting season?
A2 Milk, which hasn't had the best year, 24 months as it was, but they produced a really, really bullish set of results that was much higher than expectations. Shares jumped as much as 10% on the day that they released their result, which is, given the context of markets at the moment, pretty impressive. They've got this new CEO in place. They've laid out a plan to turn around the business again, and they're just sort of ticking off all those boxes nicely. Another one that impressed was Spark, which has, also again showed a lot of strength. It's one of these big infrastructure companies that investors love at the moment. There's a big M&A deal every other day for these companies at the moment, and Spark itself sold off a big chunk of its tower business as well for a lot of money. So they're sort of seen as sitting really, really strong and really well balanced. The other one as well was Somerset. There's obviously a lot of news around the softening housing market in New Zealand, but they continue to defy that somehow. And again, their result was above expectations.
What about the losers?
So Fisher & Paykel Healthcare, which didn't actually provide results, but they provided an update to the market, and that was basically a significant downgrade on their expectations for earnings in the year ahead. This is one of these companies which has been a COVID beneficiary, and it's sort of people aren't really sure how they're placed as COVID starts to come off, and maybe some of those tailwinds that they've been enjoying start to go away. And sure enough, the company has basically said, look, we're not really sure how much stock our customers are sitting on at the moment and what that means for future orders from us as well. So they're sort of seen as a bit of a bellwether as well for these consumable type companies. And, a big reaction to supply chain issues has been to really ramp up inventory in companies. And so if a company like Fisher & Paykel Healthcare isn't sure how big an inventory their customers have at the moment, then maybe that's a sign for other consumable companies. Another one that was pretty soft was Vulcan Steel, recently listed in Australia and New Zealand. They were very, very conservative in their outlook for the year ahead, particularly in New Zealand. They sort of talked up Australia a bit and the Australian economy and saying things are still looking pretty good over there, but they were pretty downbeat on New Zealand, which was an interesting contrast to Fletcher Building, say, another sort of similar company who was talking up their prospects for the year ahead. So, there's a little bit of divergence in views as to economic activity in New Zealand specifically.
Was there much provided in the way of guidance?
Yeah, so a lot of companies did actually provide guidance. I think it was less than half overall, but was certainly again ahead of expectations. Guidance has been an interesting issue for these companies for 2 years, if not more, obviously because of the unprecedented nature of the environment at the moment. companies or investors, analysts are increasingly pressing for guidance because, at what point does it become, well, this uncertainty is just a state of play now. So there was guidance provided. It was still pretty soft, pretty cautious, but some companies are beginning to say, "Yep, this is the new normal. We've just adjusted to how things are going. We can provide guidance," but there was still quite a few that didn't as well. So a bit of a mixed bag on guidance, which obviously we all like to see as investors, but it's kind of fair enough at the same time, given there's still a lot to come.
So, what are the general expectations for the next year then?
Yeah, so as I mentioned before, there's a feeling that maybe the New Zealand economy is not doing as well as, say, Australia. So listed businesses that have a presence both here and in Australia are seen as potentially being a bit better placed for the next 12 months. The Australian economy is seen to be performing better and have a better outlook. And so if you've got exposure there, you're probably going to do a bit better. Whereas there's still a lot of questions over the New Zealand economy. There's a lot of frustration amongst the businesses, and the analysts picked up on this as well, about some government policies, particularly around immigration, retirement villages, for instance. They've been very vocal about needing more nurses and trying to get more nurses into the country. So there's still a lot of concern around some of the policies. Although, this week we might see COVID rules abolished altogether. So who knows how that plays out. The other thing to watch as well is just how supply chain issues do start to solve themselves. There has been a lot of talk about prices are coming down, things are clearing up, but Mainfreight's Don Braid recently in a presentation said that it's actually between China and North America, it is starting to get better, but actually between everywhere else, it's still really bad. So there's still a lot of uncertainty out there. And then, of course, you've still got the war raging between Ukraine, Russia, and this European energy crisis, which is just around the corner as well. So there's still certainly plenty of headwinds out there.
Hamish, thanks very much for your time.